Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody, welcome back. Happy Friday to you. Hope you're all doing well. Markets are trying to bounce back up here, but one market that does not want to quit is gold, having a third big day to the upside. Morning to everybody in the chat. Good afternoon. Welcome back. If you're new, thanks for being here. Shout out Dinero Noticias for becoming a channel member. We greatly appreciate that. And you are supporting our team's coffee fund by becoming a channel member. So I greatly appreciate it. And if you have any questions, please feel free to ask them and I will prioritize them in the chat. Of course, I'll try and answer as many questions as I can, but if a channel member comes along, like our good friend Bulent here, what's up, Bulent? Good to see you. I do try and prioritize their questions as they're supporting the channel. I appreciate it. Okay, so does anyone think the dollar index is oversold, says R. Patel. We're long on gold, says, I'm not sure how to say your name. Could somebody tell me how to say this name? Is it info? Do you not say the M? Is it fo? I'm actually very curious. Do you think profit taking will happen on gold today? Man, I know that we have had this conversation. For regular stream viewers, you know my thoughts very well on gold. I have stopped long ago, and thank goodness, trying to call the top on gold long ago, because gold, when it trends, it just trends. And when a trend, okay, so here's the thing about trend following. A lot of traders call themselves, oh, I'm a trend follower. Okay. But I don't know that you are. Info. Okay. Hey, look, you learn something new every day. Nick, I've been slaying lately using the EdgeFinder. Edwards, that's awesome. Congrats. Congrats on your progress. Glad to hear that. What do you think about euro dollar? Definitely take a look at that. Nick, for today, just give us your advice on how to age like fine wine. Wow. R. Patel. Look, I'm only 28 years old, so I can't give you any of that experience because I don't know what I'm going to look like when I'm 48 or 58 or whatever. I don't know, man. I don't know. You want a quick lesson on how to age better? Maybe don't trade because there's some stress involved in this stuff. But maybe we can talk about some risk management that might keep you from aging as fast while trading. Maybe I could help you out with that. Okay, look. So gold, right? A lot of people call themselves trend followers, but I want you to think about something. Think about this. Trend followers. In the chat really quick, type yes if you are more of a trend follower. Type no if you're more of a reversals trader. Like if you're somebody who you would qualify yourself like, oh, I trade more reversals. Like I'm looking for, let me see if I can find a better example. Like you're looking for, lows. You're looking for significant levels. You're looking for oversold or overbought. Type no, right? You're more of a reversals type trader. And if you're more of a trend trader, you're trying to follow the movements that are occurring. And sometimes when they chop back and forth, basically, if you like choppy markets, type no. And if you like very trendy markets, type yes. Because there's profitable ways to approach both. Like, I do think most traders try to be trend followers, but I'm going to tell you something that might shock most of you. Well, not most of you. Some of you guys will be totally understanding this. Okay. Look, most traders think they are trend followers, when in actuality, they are not. Think about the words that we're saying. Trend follower. Okay, when you follow a trend, inherently, you should be lagging. Okay? And you might say, well, why would we want to be like, let's just, again, you want to know what true trend following is, which is a methodology that I am a believer in. It's based on what I trade. Okay. I have a strategy. I call it the TTF strategy, true trend following, because most traders think that they trade with the trend. Most traders are like, yeah, no, I go with the trend, but they're not true trend followers, because true trend following is not glamorous. Okay. You want to know what true trend following looks like? True trend following means following the trend, not calling the end of a trend, not taking profits within a trend that's still going. True trend following. Does Nick even read the chat? Nope, I don't. True trend following means you are still bullish on a market like this, even when it's showing, oh, it might be topping out. We're still bullish. We're still bullish. We're still bullish. Okay, now we're not. Okay. True trend following means you never call the top or you never call the bottom. Again, bear with me here. If you are a true trend follower, you never say, enough's enough, I'm taking profits. And you never say, it's reversing. You just follow what the trend is doing. Okay, so what that means, why I call the TTF strategy, true trend following strategy, is because I always exit my positions through a stop loss. Okay. Now, this is not glamorous because there's some ugly downsides to trend following with a trailing stop, which is what I think is true trend following. True trend following is not taking profits at a 3-to-1. Now, are you trading within a trend? Yes, but you're not a true trend follower. And that's okay. Like, if you don't like trading with trailing stops, totally fine. But here's the thing. True trend following means when we look at something like the NASDAQ, your price action here is bearish, right? Until proven otherwise. Bearish, until we flip, over a moving average or whatever your key trend following metric is, right? What we're looking for here is not to call the top. So we're not taking profits. Like, so if you are a true trend follower, you don't do this, okay? Right? So let me show you an example. Let's say that you are looking at a trend. Ready? This is the most common approach. This is what I used to do, right? This is what a lot of people do. There's nothing wrong with this. But let's just say, for example, let's just make up a trade. Let's say we had an awesome trade, came to support, and we got long right here, right? And then the market ripped, and you say, awesome, I'm riding the trend, and then I'm going to cut it off right there. That's not true trend following. In my definition, I'm not in charge of anything. This is just how I define the markets and what makes a lot of sense to me. True trend following does not mean you say, and right there, I think the trend's going to end. True trend following means you follow the trend. You don't call when it's over. Okay. So instead, we say no take profit. And what do? We wait for the market to tell us when the trend has failed. Something as simple as a 20-period moving average could be used. In my case, I like to use market structure to tell me when a trend has fallen. And what that means is I never take profits at the top. I always take profits via stop loss. So what we could do is we could say the first time that this breaks this 20-period moving average, that is when we get out of the trade. Okay? That's true trend following in my definition. Okay? So we get long. Let's say we're long here. We have a good entry. Fundamentals look good. Sentiment looks good. Technicals look good. Great. We're not taking profits just because it goes right here. That is one of the most common exit strategies. And that's fine if that's what you want to do and you have your back-tested system. Totally fine. I'm telling you what I do. I do not exit just because we hit a level of resistance. That to me is not true trend following. You're trading within a trend, but there's a difference. Trend following means you inevitably are going to lag the end of the trend every single time. Every single time I close at a worse price than the top. But I don't know when the top is going to be. That's the distinction. We don't know where this is going to go. So when we get this failure at the 20 period moving average, we say, oh, that's it. Now we're out. Okay. So let's go back to a trade that I'm in now. Gold, right? Somebody asked me, Nick, when do you think gold is going to start to pull back? I get that question every day, 5,000 times. And the answer is, I don't know, but this thing is trending higher. We caught the pullback into this area. My stop loss is here initially. It's now been trailed in behind market structure, right? So I like to trail stops via market structure. Today, we've got another break higher. If we close like this, today I'm going to move my stop loss further into profits. But I'm not going to take profits here because I don't know if this thing wants to do another up day on Monday, another up day on Tuesday. If you think it can't happen, don't hold your breath. Gold does that stuff. I'm not saying it's guaranteed to happen, right? I don't know where it goes. From here, I'm letting the market, I'm following the trend. There's a level of humility that has to come with that. There's a level of understanding. You don't know what's going to happen perfectly next in the markets. I took this trade, EdgeFinder confirmation, right? We had from my system, the bullish reading on gold has been pretty strong recently. Pulled back intraday to a very key level of support that I had drawn off of the daily chart. We pulled back. I entered that trade and I'm still in it. So in terms of what am I doing right now, I'm managing a position. So I have my stop loss moved. We've just run away from that stop loss. So now that we've broken and closed, well, today, if we break and close above this level here, I'm going to go ahead and move my stop loss constructively higher, probably around here, just below this key structure of support. We can actually go ahead and mark on gold our level of support here. Now, what's significant about this? What's significant about this level is that if you get a pullback into this area and we are still in a dominant uptrend, I would expect that we would see some sort of response from the bulls if they're strong enough to keep this trend going. If they're not strong enough, okay, that's my signal to take profits. Does that make sense? I just ran through my exit strategy on a very fast basis, but I hope that makes sense. We've got PPI coming out here in just a few minutes, just about 1 minute to go, actually. So let me just switch over here so we can watch this news report. So I'm just managing a position. I don't know how much further it's going to go. I'm in a very profitable position on gold. I took this trade a couple days ago within our Discord and just managing it on stream here today. There's not a whole lot I need to do with this trade other than trail my stop. So we've got 40 seconds to go here. I'm just going to switch over to the all markets view here so we can watch the overall reaction to this producer price index number. What's your profit in dollars? About $30,000. Granted, I've had a rough year so far and I'm about break even, so context is important. Coming in, breaking news. Okay, PPI comes out in just a second. Let's see if it gives us any movement today. Core PPI came in soft, which is good. If it's anything like yesterday's CPI, which barely moved markets, we wouldn't expect too much. But look at this. There we go. Guys, we got a cool print of inflation data this month. And it's largely been ignored because of all the volatility and tariffs, but not by me, not by this stream. We pay attention to the economic data, and cooling inflation is good news. That is good news because the Fed can use that as ammunition to potentially cut interest rates sooner rather than later. What does that lean me towards? Supports the bullish narrative for gold, supports the bullish narrative for stocks, right? Because if the Fed can cut rates, they can help with all the uncertainty that's going on with tariffs. And if things start to materially weaken, they can cut interest rates to combat that slowdown. To me, cooling inflation is great news, and we should be pretty content to see both PPI and CPI this week coming in cooler than expected. Yesterday, we had 2.4% CPI year over year. That's not that far off from 2%. That's the second consecutive month that we've had lower than expected by analyst inflation data. Great news. Like, the news cycle is so fixated on tariffs and Trump and President Xi, and there's like this like bombardment of negativity and scare tactic news out there. But inflation data cooling off is a good thing. I'll celebrate that all day long. That's great. Appreciate you, Nick. Never stop preaching. Thank you. I appreciate your support, and everybody who's tuned in here with me live. I'm wishing you the best in your trading this year, and I also want to wish you guys a happy weekend up next. Hope you guys have some nice plans. It's been beautiful where I live. I live in Atlanta, Georgia, and beautiful out. Beautiful out. And I'm going to do some yard work this weekend, which I love doing yard work. I don't know why. I don't know what's wrong with me. I always have. I like cutting the grass. I'm excited for it. I'm actually waiting from a cut from a cut at May, Nick. Probably going up on the cut side. Fed Watch tool. Good point, Boulette. Yeah, I mean that's the thing, right? We have seen some choppiness in the bond market, which I think actually was part of the reason that it got the Trump administration's attention. You had some pretty sharp moves lower right before that announcement, right? The change in okay, we'll get that 90-day pause. Many people credited the bond vigilantes, if you will, the bond market, signaling, okay, if we go on this pace, we're gonna really increase the probabilities of recession. Nothing wrong with loving yard work. Totally fair. I actually love it because what I do, Panado knows my story. I appreciate that. I am a landscaper at heart. That's my humble beginnings. I built a lawn care business in my young years, and it funded my trading accounts in the opening days. Anyways, what I do during it is I usually plug in my headphones and listen to podcasts. I have been trying to become a better YouTuber this year, so I've been listening to a lot of like YouTube, like how-tos, like how to improve, how to help people more in your videos. Really, that's the core of YouTube, is trying to find ways to help people more so they want to keep coming back. And I hope that you guys on the channel feel like that's what I've found. You know what the secret to YouTube is? Well, really the secret to business in my experience so far, just help people, just like genuinely help people. And somehow that magically works because people want to come back and they want to. So, I don't sell any courses. Every piece of educational material that I do, like I'd say 99% of the educational stuff that I've done and sharing my own experiences is all available for free on YouTube. And that's part of the model for like how we do business. Like obviously the EdgeFinder, this is a thing we sell. Like I'm never going to lie to you. This is a sales tactic through and through. It's a great piece of software, and I think everybody should own a copy. But like YouTube, free content, free courses, free everything to try and just offer genuine help to traders, because I have a lot of experience in this, more so a lot of painful lessons that I've learned over the years. And that's my strategy with YouTube this year, is just find more ways to help traders as much as I possibly can. Not because I'm being a charity or a saint. It's a business strategy to help people. Any new trades? Yeah, I mean, so I have a couple things to do. But I have a lot of stuff that I'm just managing. Actually, I need to take profits. We're going to take profits right now on NZD USD. I'm going to do that right as we speak. So guys in the Discord, I'm about to close out of my... Okay, we are all out of NZD USD. Let me close this on my other broker. Okay. Give me a second here. I just need to update in the Discord. 1 second. So Kiwi dollar just hit where I was looking to get out of this position. I've been in Kiwi dollar for some time here. Well, actually not too. I mean, it's been a pretty good week in currencies for me. Currencies and gold. I've had a really, honestly, despite stocks selling off like crazy, the currency trades I've been in have been pretty amazing recently. Okay, so I'm all out of Kiwi dollar. What did I do on that pip wise? We're looking at 230 pips on Kiwi dollar. Closing NZD USD for about, what did I just say? How many pips did I just say? About 220 pips. Congrats to fellow bulls. Okay. For those in the Discord, I just dropped that. I am all out of Kiwi dollar and Euro dollar, both closed for really nice profits here today. Well, actually, Euro dollar I closed yesterday, Kiwi dollar yesterday. I'm sorry, today. So that is the latest on currency side of things. So I'm all out of this position. Just traded this one zone to zone. I've been bearish on the dollar, so this has been playing out really well. So only dollar position remaining for me is, of course, my gold trade, which it's not quite the same as, a currency pair trade, but doing quite well so far. If you want to join the Discord and you're not already in there, we're doing discounts on everything this month for our 3rd year anniversary since we launched the EdgeFinder. Everything is currently 40% off. If you'd like some information about that, if you want 40% off the EdgeFinder, actually for stream viewers, we'll do 45. All you have to do to get 45% off, whether it be the Discord or the EdgeFinder, we'll drop the link here in the chat to speak directly to the chat. Yeah, you can speak directly to our support team here. So yeah, get 45% off anything you want. We'll do it for the IP Discord or the EdgeFinder. But we have been absolutely nailing it on the currency trades here recently. Gold is also flying. I gotta say, although this year I have not made a ton of money from markets because a lot of my stock portfolio has been hit alongside everybody else's. Gold trades and currency trades have been absolutely killing it. I do also have a trade that's not going well in currencies, which is CAD Swiss. So this one, I have 2 losing positions, and I'm just going to keep watching this. They're very low lot size positions. I have plenty of room to work with this position, but you're going to have winners and losers. So CAD Swiss not working so well, but again, small drawdown, and we're going to continue to work with that position. In terms of new trades, right? So this week I took a lot of stuff and just closed out of a couple things. Euro dollar and Kiwi dollar were 2 of my picks. Let's go take a look in terms of top setups just for currency pairs for a second. Let's see what we've got here. So CAD Swiss, I still like the trade. Even though it's working against me right now, I still like the trade. What about Kiwi dollar in terms of re-entering that idea? Well, this is what I'd be looking for. So Kiwi dollar, especially with weak PPI, right? So that should be a dollar negative thing within the EdgeFinder scoring system, right? If we do get a reversal back down to key demand areas like we saw here, that's why I took the trade previously, I may look to re-enter a Kiwi dollar long. I'd also be interested if we get a big upcycle here and then a pullback into this area, I may look to trade Kiwi dollar long again there. FX has been splendid lately. Alan, yeah, I've been very thankful for FX and gold trading this year. I can tell you that, Alan, because my goodness, man, I have gotten hit just like everybody else with stocks. But I think that long term, you're getting some really good opportunities in the stock market. So I'm just going to slowly accumulate shares. Those are not short-term trades. Short-term trading wise, been playing gold, which is going phenomenal. I've been playing Euro dollar, Kiwi dollar, CAD Swiss. Those are my 4 active trading positions. Oh, and I sold a put yesterday. This is an options trade. I sold an out of the money put on the Russell 2000. So if anybody cares about options, I sold the 160 puts out to June. I collected $5.80, I think, or $5.85 in premium. And I did like 7 contracts. So I think it's a max profit of like $4,500. So if the market trades sideways, up, slightly down, all of those scenarios, I just make $4,500. If the market tanks through these lows, I just have to buy I have to buy IWM at $160 per share, which I'm happy to do. So this is what you call a cash secured put. So I shorted puts. I didn't buy puts, right? I didn't bet the market's going to go down. I actually bet that the market was going to go sideways or up. And if it goes down, I basically just have a contractual obligation to buy the shares. That's the way options work. If you're on the sell side, which is predominantly where I stay right now with a VIX where it's at, I am absolutely more on the sell side. This is, in my opinion, and not financial advice, not a time to buy options. It is not a time to buy puts. It's not a time to pay extremely high premiums, right? We talk about this so frequently. Options trading is a part of what I do. I trade a little bit of everything. You guys hear me talking from FX to gold to stocks to options. I do a little bit of everything. Right now, in my personal opinion and my approach to the markets, this is a time where I sell puts for premium. And that's about it for options, right? For trading wise, the IWM, I wouldn't mind owning some of that in my portfolio. It's a diversified ETF that I think is incredibly oversold and I think has some rebound coming for it. That being said, if it keeps going lower, I'm happy to step in and buy the shares, which IWM is small cap companies in the United States, a diversified basket of small companies in the United States. 12% down from here. If we continue to sell off, that would be a discount peak to trough of 34% off on small caps. For the long term, I'm happy to own the shares. So if it happens, great. I almost want to get assigned on this position. So anyways, am I still in the gold trade? I certainly am. I'm trailing this one. I talked about this earlier. I just marked in this level of support around 31.30. So what I'm looking for on my gold trade, I'm just going to watch to see if we're trading like this within like the next 2 hours or so. I'm just going to go ahead and pull my stop loss higher. I have a really busy day in the office today I got to get to. Content side and software side, I just have a lot of work piled up. So trading wise, I think I'm going to take my eyes off the screen in the next like 2 hours or so. And in the meantime, just basically move my stop loss, lock in something else there on the trade. But trade's going very, very well for gold. And plan is to continue to hold that one. Again, trailing this stop loss just because I don't know how far this is going to go, right? Gold could just go like, you know, it would shock the world, but would also be possible. Gold could go straight to 4,000. Like I know this would, unfortunately, for a lot of traders out there who are like leveraged short and praying for a move lower, like this could happen. I don't know that people register that that's possible. Like you could have, it is not out of the question that gold could have in the next 1 year, gold could go to 4,000. I don't try to call tops on gold for this very reason. You know why? Because people thought, let me tell you what I thought was going to happen in 2024. You ready? I'll never forget this because it just goes to show how hard this stuff is to predict. As we went into 2024, I had a target that I thought was pretty aggressive on gold for 2280. Okay. My target for the year on gold was 2280. And that to me sounded aggressive at the time. And in fact, many people were like, no way, gold is not going to like rip that, rip up there. It's already overbought. That's what people were saying. It's already at the highs. What are you talking about? It's all at all-time highs and you think it's going to go up from here. I was right that it was going to go up. Absolutely dead wrong on how far it went, right? So you have to understand gold can shock. I said 2280, right? I thought, oh, 2280. I think that's a possibility for gold to do. You know what it ended up doing? It went to like, at one point, it went up to 2800. I was off by a margin of what? $550 an ounce in 1 year. It went up massively in 1 year. So for those who think like gold has to reverse, it's way too overextended. Like I said, that game is dangerous. Calling tops on a trend is just hope. It really, there's so many bullish catalysts out there for gold, and that doesn't mean that it has to keep going higher. But I just think that when you think you know when it's going to turn, gold has a wonderful ability to just say, nope, gotcha. Are you still in long position? I am. Yep. I went long at the 61.8% retracement on the daily chart, key support level, and had a very nice reading on the EdgeFinder's top setups reading. Went long gold and still long currently. Stop loss has been trailed into profit, and my plan is to trail stops here. I mentioned I'm probably going to update the stop loss inside of the Discord right after stream. Probably going to move it around 3,100, but I'd like to just take a look at it when I'm making that call. Anyways, guys, I mentioned this earlier, but the EdgeFinder currently we're doing our biggest sale of the year. It is currently 45% off for live stream viewers. If you'd like some information about how you can take advantage of that discount while it lasts, we'll drop a link here in the chat to speak directly to our support team to get 45% off. Here it is. So definitely take advantage. Nick, by the way, I entered the DNA funded challenge. I completed 20% of the profit target in the 5,000 challenge. I think it's a very important step after trading on a demo account. I recommend it. Awesome, Bluent. That's great to hear. Congrats on your progress there. And yeah, definitely keep us posted with how that goes. Okay, real quick, guys, we're going to take a break, thank a sponsor, and then we will be back with today's guest. We have Kenzo coming back for Fundamental Fridays, one of my favorite sessions of the week. Stay tuned. We launched the EdgeFinder 3 years ago in April of 2022. And now, years later, the tool has helped thousands of traders take their fundamental analysis and sentiment analysis to the next level. Traders can track things like the commitment of traders data, which shows institutional money flow, whether they're buying or selling certain assets like gold and currencies and indices. Additionally, we've made economic heat maps that allow traders to track easily the fundamental or economic data trends that we're seeing in markets right now. You can also track retail positioning and see what the market sentiment on your favorite assets are right now to look for some contrarian signals. And of course, it strings it all together with the top setups algorithm, showing traders the most convicted top ideas that the EdgeFinder is producing now. The EdgeFinder has helped traders go from beginner to pro in terms of the fundamentals, and has helped many traders go from unprofitable to finding the missing pieces in the name EdgeFinder. So if you're not already using the EdgeFinder, let me tell you about the biggest discount that we offer all year long, starting right now. The 3-year anniversary sale is going to be our biggest discount that we offer all year long, and it is now available to people who are watching right at this moment. Traders looking to get access to the EdgeFinder can take advantage of this massive discount for a limited time using the link in the chat being dropped right now or in the description of this live stream. If you've been thinking about getting a copy of the EdgeFinder, do not miss this opportunity. It is the lowest price that we do all year long, and it's a one-time payment to get access to the tool. So don't miss it. Celebrate 3 years with us by getting yourself a copy of the EdgeFinder at the super discounted prices. Thanks for watching. And now back to the show. All right, we're back with Kenzo. Hey, Kenzo, how are you?
I'm doing great. Thanks, and you, man?
I'm doing well. It's good to have you back on the show. And, it's been a crazy, crazy couple of weeks. We've had some really interesting conversations within all of this last, crazy sell-off we've seen in the S&P 500 and the NASDAQ. In fact, 2 days ago, we saw the second biggest all-time upward move on the NASDAQ in a single day. It was absolutely insanity. We saw, again, from those lows of the day, lows of the session to the highs, we saw a almost 16% move, which is absolutely insane. I'm wondering what your thoughts are with the indices right now. We've had some good inflation data this week, but there, of course, was also the 90-day pause from Trump. and there's on retaliatory tariffs, and still some escalations between the U.S. and China still ongoing. So, what are your thoughts on all this?
Yeah, at the moment, I think it's a bit difficult to just to point out, especially with the tariffs, because at the moment it seems like we are still going to have these tariffs for quite long, and it shows us that the market doesn't really like the tariffs, and it's obvious. But at least they did pause. But the problem is we still have this trade war with China, so which
Mm.
means I'm just going soft on this. I did show that nice move. I think it was 12% before that, before the market
Mhm.
closed. We did jump on that because we had the good news that they will pause for another, I think it's 3 months and something like that. So, but now it seems like this tit for tat with China, it's just delaying the market. So the best thing is to just to stay up to date. I think if maybe they can actually find a solution between China and US, I'm 100% that the market will still continue going higher. But for now, I think we are just here for consolidation. The market will just move around the same level.
It's been a hectic couple weeks. You know, every time it seems like we're finding some bullish ideas, we get slapped back down with some big bearish, moves. I'm curious from a price action standpoint. It sounds like you're more leaning towards potential buys, but what would you need to see in order to take a buy or sell position? Like, what's the what would you need to see price action wise and or fundamentally?
Come again. I think the network is not really very good on your side.
Oh, sorry about that. Yeah, no. So I basically just said, in terms of a price action standpoint, what would you be looking for in order to find buys or sells? Like, would you be looking for a breakout? Would you be looking for a specific fundamental catalyst from China? What are you thinking?
Yes, I think on the moment it's no longer about the market structure. It's actually on the fundamental side. If maybe they reach a certain deal, that will be good for me to go in, because at the moment I don't really think that the market will keep respecting whatever levels that we have. If the good news are going to be out there, I think the market can break anything. But at the moment, we can see that things are not really as nice as we think. So we still have that pressure. So at the moment, I can say I will stay out of indices for now. And I will just focus on other things.
Sure. Yeah, no, it's waiting for some clarity, waiting for some more clear trends to form. I think that's a perfectly reasonable thing to think, especially from a trading perspective. What are you watching more so? Are you watching gold, Forex pairs, Bitcoin? What's most interesting to you right now?
Yes, I was actually on gold, which was moving very nice.
Mhm.
GBP, GBP USD, and the other ones, they were moving also very nice. So Euro USD also there. So they were just obvious. They were obvious. So I was focusing on them most of the time. But gold, it was just straightforward. So I was mostly on gold.
So, do you think when you look at the dollar move here, right? Because you just discussed a lot of dollar rivals, if you will. You have this big fall off in the dollar. Do you think that that is overdone? Like, do you think there's a bounce back coming for the dollar index, or based on all those concepts, right? Euro, pound, gold. Do you think there is more room for the dollar to continue lower? I mean, Kenzo, we actually just broke below 100 on the dollar index. Is this signaling that you have much more
Mm.
room to fall for the dollar index?
Yes, I think even if maybe it doesn't really go crazy as that, but I think it's that time where we are going to see the market going lower. I heard somewhere, I think it's CNBC, they said instead, because if you still remember with the FOMC, they were expecting actually two rate cuts. This
Mm.
time it's like they are expecting four. And from there, we started to see the market continuing with this weakness. So that is actually good because now the market is pricing itself for lower rates. And now we also see some of the events not really aggressive. So that is good for rate cuts. And Trump is also pushing for that, which means they might say we're not going to cut because of political pressure and stuff like that. But at the end of the day, I think they are going to actually cut those rates so that they can boost the economy.
Well, I think it got a little bit easier today, right? With the PPI and CPI this week coming in lower than expected. That gives the Fed a little bit more room to work, right? Because now they have less
Mm,
worries of inflation. There's still, of course, the inflation risk, and I wouldn't say that we've beaten inflation per se, but it's looking a whole lot better than we were up in the high threes or fours or fives,
mm,
right? We're down now officially on the lower end of twos. 2.4% CPI gives the Fed much less stress, I guess, on inflation, and now can stay, really
mm,
focused on unemployment. So if unemployment rates come down, or sorry, go up, like if we get unemployment rising, the Fed has more potential to
mm,
actually cut the interest rates. So it's almost like you're getting that Fed put, and at the same time, Trump seems pretty adamant that he wants yields to continue to come down. He wants rates to come down, and he also wants
mm.
the stock market to clearly not crash either.
Yes, you're right on that. So at the moment, it seems like things are heading on the right direction, even though the tariff seems to be going to maybe, let's say, they might have an effect on stagflation, which is something that we don't really want. But beside that, I think we were heading on the right direction. Events were now going lower and lower, which means that gives FOMC or Fed the chance to cut those rates. But we will see, because if they cut also, uh, it might not really look for other economies, but it's something that we think they have to go there, especially they don't actually have any choice. Actually, they don't really. I mean, they have to act, as they also have the pressure from the political side. I think things are going to actually go well from now. Let's hope that China and US get this thing done. I saw China, they said they're not going to increase anymore, or they're not going to play this game of Trump increasing those tariffs. That maybe might force them to go to the table. And that, I think, is going to be a very good deal. And I think we're going to see some a very nice move.
Yeah, no, I think to be honest, I actually feel much more confident about the situation for things like indices and things like the state of the economy. I know people are still very scared out there. We've talked about this many times on the channel. The put to call ratio is still very high, showing there is extreme levels of fear still in this market, uncertainty about how tariffs could impact the economy, which is
Mm,
true and fair. Like there's fair concerns there, but what I find some comfort in is the idea that number one, the Fed is now a little bit more positioned to cut interest rates after today and
mm,
yesterday. And you also got a response clearly from Trump based on what was happening in yields. I mean, take a look at the 2-year yield was dropping dramatically. And as that was happening, that is right when we got the 90-day pause. So you got this bounce back. Clearly,
mm,
the bond vigilantes got the attention of Trump and team. I mean, specifically, I think he actually even mentioned that he had watched something from Jamie Dimon, the CEO of J.P. Morgan, and at the same time,
mm.
you had Bill Ackman, a supporter of Trump, go on Twitter. I'm not sure if you saw this, but basically, pointing out that these sweeping tariffs could be too aggressive and could send us into a recession. So it seems like the Trump
Mm.
administration's willingness to listen to that was perceived as a positive thing. And clearly, some key voices in the economy are able to actually get the attention of Trump and team.
Yes, actually, I think it's a lot of them. They are starting to raise their concerns.
Mhm.
Slowly, I think Trump is going to listen to them, and I think he did actually. But even though he doesn't really just want to change overnight, because it seems silly just to put something in place, then 12 hours later you change, especially
Mhm.
when you are the president. So he's still trying to be aggressive. But I think maybe the formula there is to just bring those countries into the table and say, you know what, let's negotiate 1, 2, 3. But at the end of the day, the decision that he took, obviously, they are not really good. And I think those guys, they are trying to mention that oh, I think those recession, I mean those tariffs are actually aggressive, especially on the economy side. They did mention those recession and stuff like that, and it's something that we used to talk about, but now it was starting to be like something that is going to be obvious if he continues like that. But I
Mhm.
like the fact that he did pause. Maybe something will happen. I think the only thing that we're waiting for now is only China, just to come to the table. The other things, I think, they are much better.
Yeah, and Alan asks about the 10 and 30-year yield spikes, and it's an interesting thing happening in the bond market because again, you have yields actually rising at the same time that the dollar index is falling. A little bit concerning, I would
Mhm.
say, uh, but you also have gold ripping. Like there's definitely you have the Japanese yen ripping higher here, so there is some clear uncertainty and fear that is occurring in this market. Um, the other thing with yields, Alan, that's been tricky for all of us has been, why
Mm.
are yields going up if inflation expectations are coming down? Right. The idea there, I think that there's this possibility that there's like an unwind of treasuries right now. I think that's people selling their bonds, selling their treasuries, whether it be China or Japan, which is a big holder of U.S. treasuries. Um, I don't know. It's a tricky concept. It does. I would say it's not like super threatening or
Mm.
concerning unless you actually start to see yields back at the highs, especially if inflation is cooling and you have this happening. That's pretty scary. So I don't know. It's a tough thing with the whole bond yields dropping, but stocks are flat on the day. They've rebounded a little bit from their lows, but
Mm.
quite the time, Kenzo. It's a little confusing. Do you have any thoughts on the Japanese yen, by the way?
Yeah, I saw that. I think it was Germany. They thinking about selling their. I mean, taking back their gold from US, and
Hmm.
other countries. They're trying to sell their bonds, US bonds. And at the moment, I saw they were mentioning Japan and also Swiss franc. I think Switzerland also as a safe haven country. It seems like they are going to buy their treasury bonds from that side. That made the Japanese yen to go aggressively positive. So, but
Hmm.
I don't know if maybe that will actually become fruitful. And yeah, I think at the moment, those are the challenges that US can face, because it seems like US, according to other countries, it's no longer as stable or
Hmm.
as safe as before, because it seems like things can just change now and then. So I think they want to diversify their bonds. So because countries, they do that, even China, I think they threatened to sell some of their bonds, US bonds. So that is something else, and it's billions of dollars, obviously. And the safer countries to do that, it's mostly Japan, CHF, and the other ones, or maybe even gold, to buy extra gold and stuff like that. But yeah, I think maybe it's because of that. And it's been moving very nice. If you check GBP, JPY, and the
Hmm.
other ones, they were like seriously selling. So it was very nice.
It's very I mean that is kind of answering that question for Alan and for everybody else who's like, what's going on here? I think that there's this weird dynamic that is quite rare, which is sell the
Mm.
dollar, um, sell US treasuries, and diversify to other safe havens, right? I think that's kind of what we're seeing happening. You're seeing the Japanese yen up. To your point, the Swiss franc up. you're
Mm.
seeing gold up. So perhaps many of these reserves are moving money around, and perhaps there's like this downgrade on interest in U.S. treasuries, U.S. Investments, because of course of the we don't know what's going to happen to the economy. We don't know, there's just many kind of uncertainties about what's happening in the United States. So perhaps that is why there's a little bit of like a bond repricing going on, where you're seeing yields jump. And um,
Mm.
I think many fundamentalists, Kenzo, often refer to the bond market as like the most important market because it gives you an idea of the economy, inflation, risk appetite. It all is kind of baked in the 10-year. It's a very, very powerful chart. And amazingly, whenever I talk about the 10-year yield, I've noticed this in my video retention. I don't know if you ever look at your YouTube retention. It's actually not a popular topic. People do not really care when I talk about the 10-year
Mm.
yield. People always want to talk about gold. They always want to talk about the NASDAQ. And I get it. Those are exciting things. But this chart right here is very important.
Exactly. Exactly. Yes, I think mostly when we go on trading, whether it's in the indices or forex, we sometimes forget about bonds or treasury yields and stuff like that.
Mm,
But they actually help us to understand the state of that economy. And most likely, when we talk about bonds, the most important one, they are the US one,
mm,
even though we don't really follow CHF or JPY bonds because they are, I think, maybe second, third, even if they're not really that crazy big. But US bonds, they are quite important. When they go up, when they go down, they mean something. If you mix that with VIX or volatility, you start to get the idea why there is a panic, why people are buying bonds or why they are selling, why the bonds are going up. What does that mean actually
mm.
for that economy? When it's selling, what it's actually happening, you see. So I think it's something that people they have to understand, but it's not a most popular thing. I never heard many people talk about bonds. I also don't really talk about them most of the time because it's not really a popular topic. So yeah, I think it's something very important. So Swiss franc, it's crazy. You can see that it's been selling for a while now.
Yeah. Yeah, no, I mean, look at that chart. I mean, that's a crazy, crazy move. And Ball Out in the chat says same thing. Violent moves are insane. Guys, this is for everyone in the audience, this is some pretty wild times. Really, if you have not been trading uh, for that many years, I will say this feels very similar to what trading the COVID pandemic felt like. There were many charts that were moving in straight lines. If you were an
Mm.
options trader in this time or that time, it was very difficult because premiums went out the wazoo. People went crazy with volatility. Currency markets made much more large moves than what people were used to. The indices crashed way faster than people thought were possible. These types of environments, the issue
Mm.
is that it's such a shock to the way markets have been moving that it catches many people off guard. So I do want to just say to everybody who is listening who may be challenged this year, you are not alone. In fact, I think the vast majority of traders are having a harder time in this year because if you've built a system around the way markets have been behaving the last few years, this is a shock to the system, right? It's a very different type of environment. Belen says, I bought an adjustable desk to relieve neck and back pain. I actually have one. I could raise this desk and stand if I wanted to, but yeah, I don't know. Kenzo, how do you, in an environment like this, where clearly the dynamic has changed, we see these massive moves, what do you do? Do you reduce position size? Do you look at things differently? Do you trade any differently? Do you stay out of the market more? How do you approach this type of environment?
I actually enjoy trading during this time. Maybe it's because I understand a few things, especially CHF like that. I know, for those who know, obviously you know this, mostly CHF moves the same as gold. When gold goes up,
Mm.
mostly CHF will be going down most of the time. If there is panic, let's say maybe like now there's tensions and stuff like that, most likely CHF they still actually before US, or let's say before other things, Swiss franc it's actually a neutral currency.
Hmm.
So you can actually, maybe now things start to change, but it seems like before, like for more than 100 years, it's been actually a safe haven currency. Then gold also quite the same. So
Hmm.
when gold is going up like that, if maybe I feel like prices of gold or maybe it's a bit aggressive, I can just sell Swiss franc or
Hmm.
USD. Yeah, it's, you can see still flying. So mostly you just do that. When there is war and stuff like that, Russia, Ukraine, if you check, most likely Swiss franc was still aggressive. But
Yeah.
the reason behind that is to understand fundamental stuff. What's really happening during this time? Which pairs can you trade safely? And it doesn't really get that crazy volatile. It moves very nice, even though sometimes it might move in the same direction. But by understanding the overall movements of those markets, it's way much better than just focusing on one pair. At the
Yeah.
moment, if you're forced to trade on indices, S&P 500,
Hmm.
most likely you're not going to make it very nice, you see. So that's why
You
you
know,
have to have this understanding of just understand what is the safest pairs to trade during these tensions, which
hmm.
ones are not really likely to perform very well if other economies are performing very well. Like if maybe there is no war, there is no tensions, Swiss franc doesn't really perform very well. Even
You
gold,
know,
it doesn't really perform very well. So now it's easier for us.
so Kenzo, correct me if I'm wrong, but it actually sounds like you do something very similar to myself, which is in 2022 uh, and in
Mm,
2025, those 2 years we saw indices trade terribly, right? Very, very ugly price action in indices to the downside. You and I, and again, correct me if I'm wrong, but I believe both of us typically look for the long side of indices when they are cooperating.
mm,
And that's a very important distinction because they are not cooperating right now. From a trading perspective, the
mm,
indices are a disaster if you've been trying to get long and try and trail a stop loss or big terrible, terrible stuff because they're just in melt mode, right? They're
mm.
just selling and selling and selling. So what it sounds like you
Exactly.
do, which is what I do too, which is in times like this where we are not seeing a healthy bull market and prosperity and kind of a realm of safety, we pivot more towards
Mm,
Forex. And for me, I like to look at gold
mm,
quite a bit during times like this. I love trading gold. Like I've had probably one of my best ever gold trades right now, trading in this
mm.
environment. And then you mentioned looking to safe havens, potentially catching some Forex trades. So that is a great answer in terms of what do you do when the market completely shifts? Well, for me personally, I find myself focusing on other markets that I think are trading much more suited towards my style. Is that what you do too? Basically, you focus a little bit more on Forex, a little bit more on gold, and just put the indices to the side?
Yes, 100%. Most likely,
Mm.
I think maybe it's because we understand fundamentals. If maybe you understand what's really happening now with Apple, for example, we understand the reasons behind why Apple is selling. And there is a lot of those companies which are not going to perform very well, or some of them they are actually confused.
Yeah.
So if you go with that mindset and go and you want to trade Nasdaq, what do you expect? So the market will be just going up and down. But the reason behind that, I understand other pairs like gold and why they are moving like that. CHF, which I've been actually following for quite long. Sometimes it gets boring when things are moving very well because it doesn't really
Mm.
move that much.
That's a great
But
point.
now
Yeah.
I've been just following it for a while now. I think since January or something like that. It's been going like seriously very nice on my side.
Mm.
And it's funny because it's like I'm used to them. It's not like maybe it's a new thing to me. I can take a month without trading CHF, but when things are moving like this, I know where to run to. So I don't really, even like, I don't really, at the moment, for me to go back on NASDAQ US30, I have to check the news, not the structure. What's really
Mm.
happening?
Mm.
Maybe did Trump lifted the tariffs or something? So I thought maybe 2 days ago when the market was moving very nice, I thought maybe even China was going to get into the table, and that was going to push me back to the indices. But with that, I can see that the market is still very fragile, it's better for me to go on Swiss franc, on gold, maybe now even JPY, because I heard they want to start to buy their bonds, and that it's actually it's part of my strategy, even though it's not a return strategy. I just know that these pairs, they will perform very well when they actually, before maybe that, I can say I had this thing. I was reading this book where you have to be aware of when the market is performing very well. There are pairs that you're supposed to check. When the market is not really performing very well, or let's say the political space is not performing very well, or things are bad, there are pairs which are going to perform very well. When the inflation is higher or interest rates are higher, there are things that you're supposed to look at. Maybe there are those bonds that you're supposed to check. If inflation is lower, there are pairs which are going to perform very well, and the other ones that are going to perform very bad. So if you split those pairs and put them there and say, okay, they perform very well when the interest rate is higher, then you tick. If this one they perform very bad when the inflation is bad, it's lower or something like that. Now you will understand, okay, why the market is performing like that. You see,
That's great.
so
I mean, that's
and it's easy. It's easy once you start to understand that.
well, yeah, and it's not, again, this is something that we've talked about before on the stream. But when you are, for audience members, when you approach and embrace fundamental analysis and sentiment analysis rather than just technical analysis, the power of understanding why the market is behaving the way that it is. Kenzo just gave the example of knowing that this is a time you watch the Swiss franc, right? When there's then severe uncertainty, you pay attention to the Swiss franc, you pay attention to the Japanese yen, you watch gold, knowing that as a fundamentals trader, right? Fundamental analysis focused on the macro, focused on the environment. These are what you start looking at is these symbols that we look at, they're tools in a toolbox. In certain environments, we watch indices. In certain environments, we watch gold. I know there are many traders, we've talked about this before, there are many traders who are strictly gold. I only ever trade gold, or I only ever trade euro dollar. I only trade S&P 500. But when you put that to the side and you say, I'm actually a fundamental macro trader, you trade all of them because there are certain environments, there are certain times when the path of least resistance is watching Bitcoin, is watching gold, is watching euro, is watching, S&P, whatever it is, right? There are certain times to watch certain charts. So really good stuff, Kenzo. And again, I appreciate, as always, you coming on and sharing some thoughts with us in this crazy market environment. I'm sure a lot of people really appreciated your comments today. For those listening, if you guys would like to find more work from Kenzo, he has his own YouTube channel where he puts out some wonderful content for free to the trading community. If you want to keep up with what he's watching, take a look at his YouTube channel. We'll drop the link here in the chat to where you can subscribe to Kenzo's YouTube channel. It's at Extra Hot Forex on YouTube. Search up Kenzo Extra Hot Forex. If you're watching on a television or on your phone, if it's easier for you, just search it up. Kenzo, thank you very much for coming on to the show today and sharing your thoughts.
Thank you very much, man, and also your viewers.
Awesome. All right, Kenzo, we'll see you next time. And again, guys, great stuff. Always recommend that when we have a guest on, that you make sure to go add them to your subscriptions list, keep up to date with what they're watching in markets. I know I've learned a lot of things over the years from people like Kenzo who come on the show and add some value. I think we're supposed to have Forex James coming on, but I have not seen him pop into the live stream just yet. Just a heads up. Not sure if we've heard anything, Chandler, but if we have, let me know. Gold's still ripping here. Again, based on our conversation, safe havens are very attractive here today. Seems like basically all other safe havens are benefiting from the dollar downside today, right? So you've got indices now back in the red. Look at this. NASDAQ was positive, now back negative. It's a whipsaw market for sure. You got the DAX down 2% today. The Nikkei down 1.4. Chinese stocks are slightly higher. But really the big winner today is the Japanese yen, the Swiss franc, and gold. Safe havens ripping higher. So we will see just how much this wants to go. But I'm going to go ahead and trail my stop loss on this one. Let me see what. Got it, Chandler. Yeah, I didn't see him on there. We'll see if he shows up. I'm not sure if I'm going to be able to do another hour. I got a bunch of stuff to do today, so I might have to let Chris know we're going to call it early. If we don't hear from James, we'll give it a few minutes. Nick, will the dollar ever be a safe haven again? I think very likely it will be. It's just right now, people are very uncertain about what's happening, but I don't think this is my opinion. The death of the dollar, if you want to make a bet on that, I just don't think it's not going to be like overnight like this. Like if the dollar is losing safe haven status, it'll be over the process of like, and maybe it's already started, but like, I think like the process would be multi-year. And I actually don't think it's in the process of start, or maybe it's starting now. But in recent years, the U.S. economy has been so gangbusters compared to the rest of the world. I think if anything, the reserve status of the dollar has actually strengthened over recent years rather than weakened. The U.S. economy outpaced most of the rest of the world in recent years, going past COVID. Right now, that can reverse course and change, but I'm just not going to be the one to make that kind of prediction to say, oh yeah, no, the global reserve currency, the most powerful nation on earth, I think they've just peaked and is turning around. That's like trying to call the ultimate top. It's one thing to try and call a top on gold. It's a whole nother level of trying to call a top on the entire US economy, which is the most powerful economy on earth, right? I just don't, I'm not going to be the one to try and call that, because there's plenty of doom and gloom YouTubers that tell you, oh yeah, no, the US has peaked, and they've been saying it since the US started. So before there was even YouTube, there was YouTube videos coming out about how the dollar and everything is going to crash. So I don't trade that way. I don't make decisions in the markets that way. I don't make, ungodly giant predictions about what the market's going to do. Like if you ever watch my channel, like, if you've watched my channel for a while, you just will notice like I never make like massive predictions about the markets themselves, right? I'm not here to say Bitcoin is going to take over everything in 10 years. I'm not here to say the global system is going to de-dollarize for the next 10 years. Like I don't make those kinds of predictions because I'm not that smart. And I think it's actually one of the smartest things you can do is to admit that you're not that smart and to acknowledge that I can just trade what I'm seeing. I'm not here to make a George Soros type prediction. I'm just not George Soros, and that's okay, right? I do very well for myself. I am a profitable trader. I've done very well over the years. I don't need to make massive predictions about the state of the U.S. economy, 10-year future. I just think that's you have to be really careful. So I don't think that the dollar index has completely lost its reserve status. And I think that, that's the thing. There's a lot of that out there. There's a lot of people who make those big sorts of predictions, but I don't think those things really help people. Like, I actually think that probably does more harm to people than good. Like, there's so many people out there, so much YouTube stuff out there that's like the doom and gloom. Stock markets are going to crash by 80% and it's all over. And, if they keep saying it, eventually they will be right. But at what cost, right? I was watching a video a couple months back. I was watching this guy. I forget his name. He's one of the most notorious notorious bears on the markets. And since like 2010, the guy that I was watching, I wouldn't even name his name even if I knew his name. I forgot what it was. He's a pretty notorious guy. There's a lot of these guys. Since 2010, double dip recession, U.S. losing, control, U.S. is gonna crash and burn, and from 2010, he has just been so bearish. There's many perma bears out there, but look at what happened, right? Do these people ever admit that they were wrong? Never. They just keep saying market's going to crash. Market's going to crash. Look, even if you got a 50% correction, which has only happened like a few times in stock market history, even if one of the most massive crashes ever happened, that guy and many other bears would still, if they had shorted this whole thing, which they definitely did not, right? They definitely got margin called or got taken. Even if they somehow were still short, a record-breaking crash, they'd still not even be break even. So just be careful with the doom and gloom stuff, right? Great assets appreciate over time. Human ingenuity causes growth over time. Markets should go up over time. So when you find people who are doom and gloom and like, market's going to crash and you should sell all your stocks now, there's a dime a dozen of those types. There's a whole lot less people who are willing to be brave and to invest in times of panic. Bulls are just way cooler. Can we just, bears are not cool. Bears are so lame. And they've been wrong 100% of the time over the years. Okay. I'm not saying like bears can't make money, but if anybody has been like a perma bear, 100% of history, they have been wrong over the very long term, right? The only time I can think of is like the Japanese 1980s crash that took like 30 years to get back to the highs. But again, if you were dollar cost averaging afterwards, you still made a boatload of money, even in one of the worst crashes of human history, right? So again, bears are just so lame. They're so infuriating. You know why they're extra infuriating to me personally is because I also know what they're doing from a content perspective. Bear stuff gets way more views. So if I started making videos mapping out why I think that the market is going to crash in the coming 6 months, do you know how many views I would get? Like if my content was doom and gloom and the bears had a safe haven in my videos and they could conjure every day and stay super perma bearish all the time together, those people make a lot of money selling stuff to the community. You know why? There's an expression that has resonated with me for a very long time. Bears sound, if you know the saying, say it with me, okay? Bears sound smart, bulls make money. Okay, so look for opportunities. Don't get margin called. Don't be an idiot. When I say bull, I'm not saying be euphoric and overzealous and greedy. That's not what I'm saying. I'm saying look for opportunity in everybody else's fear and do so in creative ways. Do so in contrarian ways, but not in negative, pessimistic ways. Be an optimist. That is conservative optimism is like, to me, that is where I find a sweet spot in markets. Reason why such people exist is because there are many people who think the same way. They manage their own markets. That's how they exist. I mean, here's the thing, and it's interesting because that's the way the human brain works. That's why those videos and people are so Ronak, thank you very much. 40 rupees. I appreciate that. Keep this banger streams up. Thank you so much. There's so many people who think that way, and it's natural. That's why there's such a popular, bearish community right now, is because bears sound smart. Oh, there's a global recession on the brink of happening, and Trump's going to crash the world, and we're going to enter a recession, and this is all bad, and it's never going to get good again. And this time is different, right? That's what you hear. That's when in my opinion, that's a buying opportunity. When you get this time, it's different. This time, the Fed can't save the day. This time, companies are going to crash. This time, unemployment's going to go to 15%. Like, eventually bad things will happen. There always are bad things too, but people do a great job in markets of overestimating how bad things are going to get. And that's why over the years, a put to call ratio like this has been a historically good buying opportunity over the long term. I'm not saying we can't go lower in the short term, but I'm not really talking about short term here. I'm talking about like long term. Like bulls don't make money every day, but over the long term, bulls make money, bears lose money. Now, again, if you're bearish, I'm not saying like, oh, you just are an idiot if you're ever bearish. That's not what I'm saying. This is the best way of saying it. Bulls make money, bears make money, pigs get slaughtered. People who chased longs here and who chased sells here, That's your quote unquote pigs. Those are people who are just greedy or absolute fearful, and they're just incredibly emotional, and they bring it to the markets, and that's who loses the most money. So if you were bearish, like if you were bearish on this pullback and you said, I don't think this is over, I think we may have room, like this is to me a reasonable expectation. Like even if you're bearish right now, I think being bearish here makes a lot more sense to me than being bearish here. Like, and we may still bottom out. I'm not saying I am bearish. Like we may get, but I think your risk to reward got a lot better if you're a bear here than if you're a bear, after everybody's absolutely panicking everywhere. Okay. Yeah. I'm not a big fan of those types of people either. Like they really are, to me, really hard to even listen to. There's so many of them, right? There's so many of them because their content gets so many clicks. Again, I think if you're like, there's a difference between being a bear, a bull, or a perma bull and a perma bear, right? The expression I always use in my channel is cautiously bullish is pretty much always where I'm at. Like I'm always cautiously bullish. What that means is that I take my foot off the gas of buying stuff when it's up, and I put my foot on the gas pedal when stuff is way down for long term. I'm talking long term. Short term trading wise, right? I have really two ways of thinking. Short term, I trade strength, right? So I'm looking for, like this gold trade is an exact example of what I look for. Market's trending well, and I waited, and it came to me finally, and I got in. But let me also be transparent. I took an initial entry here. I stopped out. This was a small loss. And then I re-entered, and that was the one. That was the ticket. We did well with this one, right? I took a loss, and then now I've got a winning trade. In the end, I'll make good money on gold. That is trading momentum in a way that I think is not greedy, in a way that I think is patient. I'm not leveraged massively on this position, right? That's healthy, slow and steady trading. And I think trading can be wildly effective. Like I am an advocate for trading and investing. Like I do both. Trading this year has been, I'm so thankful for the skill that I have built in trading this year. You have no idea. Because if I was just passively invested, right? If you're passively invested, you're experiencing a drawdown at this moment of 18% and a peak drawdown of almost 27% this year. I'm long gold. I've nibbled on stocks. I've been trading currencies. So this trading side has kept me afloat this year, despite having a market crash. And I do own stocks for the long term, right? So I have stocks that I've held for, a while, and I've been adding to them recently. So I'm experiencing some drawdown in the stocks for the long term, but I'm keeping myself afloat. I'm not making a bajillion dollars this year. Like I'm flat on the year. For context, I'm currently break even on the year. That's not very exciting. It's not super glamorous, but I will take that all day long rather than down 20% in the stock market. Is Jim Cramer one to avoid? Jim Cramer gets a bad rep. I know a lot of people love to meme on him. And he has that classic Bear Stearns, terrible call that he made. But I don't hate Jim Cramer. I think he's entertaining, and I think that he does something. I will never speak bad about Jim Cramer, because here's why. Jim Cramer actually makes calls. Most people don't, right? So people love to like make fun of Jim Cramer, but I respect the fact that he actually just throws his ideas out there, right or wrong. How many people, right? How many people actually just show you or say blatantly their opinions on the markets and what they're doing? Like not many people actually show you like, I'm interested in buying at these levels. I stop out here. people don't do that because it's hard to do, because when you're wrong, people make fun of you, like Jim Cramer, right? So he's definitely over dramatic for TV, and people love to say, oh, he's always wrong. I think in most realities, he's actually made some great calls too. First of all, he's made some horrible calls, but he's honest and upfront about it. So I'll never pick on somebody who does that, because I know how hard it is doing it myself. It's really hard. Like sometimes I put out an idea and it flops and I get like 75 comments, Nick, you idiot, why'd you buy gold there? It's a hard spot to be in. It's easy to tease that person, but it's hard to do what they do. So I'm not saying necessarily I think he's an amazing trader or an amazing investor, but I just won't tease those types of people because I know their job is hard. It's easier said than done. It's easier to do what, or it seems easy to do what they do, but he's not making bad calls on purpose. He has bad calls. He has great calls too. But yeah, he's also, his personality is just, he's kind of asking for it in some ways, I guess. Like he has a lot of like overconfidence in what he's saying. But I think that's why he's so famous, right? He's such a controversial topic. He's almost like the Trump of market news. Like he's got like strong opinions on everything, and he's yelling about everything, and he's throwing a fit about everything. So yeah. But I'm staying with the gold trade. That is so far this year the best trades that I've been in have been gold bullish setups. I still like the setup quite a bit. Inflation data today adds to the story. Yesterday's CPI data, when this data updates in the EdgeFinder, I imagine that's going to be more positive for gold. You have retail sales weak. You have services and manufacturing PMIs both came in lower than expected. So you do have some slowdown here, seasonality, trend. These things look good for gold. I'm going to stick with the trade idea. Trailing stops, managing the position. If I add new trades, I'll share it in the Discord, and we'll go from there. No, Alan. Okay. Alan was possibly going to join the call, but I think we might need to call it there, guys. That's going to probably wrap it up for me. I got stuff I got to get to, and I'm running out of steam here. So with that said, if you do want a copy of the EdgeFinder, here's a big plug for you. We're doing our biggest discount of the year right now. The EdgeFinder is currently 45% off for people during this live stream. If you'd like some information about how you can take advantage of our biggest sale of the year, click the link. We'll drop the link in the chat. Boom, right there. So 45% off. Send us a direct message. I'm sure we have more stuff coming out today. Bashy, I saw your comment, but I'm just going to move on. I got too much stuff to work on today. All good. No worries at all. We will be here. I'll be moving forward to move on to a video for the day. So I just want to save some energy for the video. Anyways, thanks guys for hanging out. Hope you're staying safe in these markets, and we will see you back in just a bit on the video. Or if you don't watch the videos, what's wrong with you? Watch the videos, and we will see you on the next live stream. See you soon. Bye, guys.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.